Welcome back. We're just mentioning about some major FNO changes that the SEBI's consultation paper is suggesting. Now, that is mainly on the computation of open interest position and calculation of the market-wide position limit. Yash is joining in with more details on that. Yash, what is the SEBI's consultation paper indicating?
Well, Horma, SEBI with this consultation paper essentially has moved towards simplifying the process in terms of how stocks get identified for getting banned under the FNO category, and of course how they come out of it. Now, of course, the biggest parameter that decides whether a stock goes into FNO ban or not today is essentially, what is the proportion of open interest of the total market-wide position limits. SEBI has suggested a change in the way open interest or the basic premise of how stocks get identified for getting banned are to be calculated today, and the underlying market-wide position limit as well. To speak about the first proposal itself, what SEBI is saying is that the current way in which open interest gets calculated, that is future equivalent, needs to be changed. Here currently, if any stock has open interest position of more than 95% of its market-wide positioning limit, then it gets identified under, FNO ban. That needs to be changed, and it needs to be done on a more delta-based approach rather than the previous one. The second thing that SEBI is saying is that the whole definition of market-wide position limit, that needs to be changed. The calculation for that needs to be changed. The existing method is that for each single stock, it should be equal to 20% of the stock's free float market cap. What is the changing that SEBI is proposed? SEBI is saying that it can be a lower of either 15% of the free float market cap or 60 times the average daily delivery value in the cash market. Whichever is lower, that should determine the market-wide position limit of that stock. And on that, a delta-based approach should be taken to identify whether stock should go in FNO ban or not. What is the purpose? SEBI says this could reduce stocks going into FNO ban by as much as 90%. Ultimately, what that does, it gives more certainty to a retail FNO, trader, whether what stocks would go into FNO ban, what stocks wouldn't, and the whole process of stocks going into FNO ban will reduce significantly, giving more certainty into the system.
All right, we take that point. It is basically increasing the ceiling and at the same time reducing the height of the individual as well, so as to reduce the gap between them and reduce the probability of them going to FNO ban. To discuss this and more, we do have Chandan Taparia, who's the derivative and technical analyst at Motilal Oswal Financial Services. Chandan, I want your thoughts on two things. One, that a lot of these norms that the SEBI had earlier made were to protect the interests of investors, but unfortunately, by virtue of those ceilings being a little low, a lot of manipulation was being done. So now to remove these things, the SEBI has gone ahead and made it a little more difficult for stocks to go into FNO ban. But in doing so, does this increase the risk of trading in FNO as well if the market-wide position limits ceiling has been increased, and even the delta-based approach that has been made, because delta itself is affected by another Greek, which is gamma, which is the rate of change of delta itself. So your overall approach or your overall thesis on this, with less stocks going into FNO ban, does it increase the risk or does it reduce the risk by manipulation? How do you view this?
Good afternoon, Mangalam. Thanks for having me. So I believe most of the parameters which has been discussed now are meant for the reason for making the trading convenience and strengthening the risk monitoring in equity derivatives. In last couple of instances, SEBI came out with change in FNO load size, reducing the expiry to one expiry per exchange. So all these are helping volatility to cool down and somehow safeguarding the interests of the retail investor. But what we noticed that there are so many stocks coming into FNO ban period even after the position in OTM strikes. Because as of now, the calculation of open interest is future and options, and in option it comes the notional. So now the requirement and the proposal is changed from the current criteria to the new future equivalent. So future open interest will be there, and for option it will be the delta base. So I believe because of that, there will be comparatively less manipulation in terms of pushing the stocks to the FNO ban period. Otherwise, if someone takes the huge position in OTM calls and put, NOI increases, stock may come into the FNO period. So I believe because of this, the risk will be comparatively lesser to going in FNO ban period. And we have noticed that once the stock comes in FNO ban period, then some sudden spurt happens because in that scenario, the normal traders cannot trade because they have to pay penalty per day per lot. So I believe the change in the delta base or the future equivalent approach will help the mitigating the risk in the stock side.
All right, Chandan, thank you so much for joining in and sharing with us your views on this SEBI consultation paper with the moves announced on the FNO side, some significant moves they're ensuring or trying to ensure that lesser number of stocks enter the FNO ban. We'll take a short break. On the other side, Manisha Gupta joins in with Peter Maguire, the CEO of XM Australia. Stay tuned, back on the other side.